Very pleased to have our first guest. So someone finally took the call, and it's our friends Branden and Shawn from TraderTV.live. Guys, welcome to Aftermarket and the first ever Aftermarket interview. The fans have spoken. They wanted to see you guys.
I mean, listen, we were wondering if it was number one. We're honored, obviously, to be as your first guest on Aftermarket. Thanks so much for having us, guys.
Dubious distinction.
No problem.
No, Barry, this is mainly your interview, man, because you used to be a trader, and we're talking to dudes that love to trade. So I'm just like an innocent bystander. I don't.
Well, it's definitely a unique culture, a unique job. It gets a little bit addicting because when you're making money, you don't want to stop because you're making money, and if you're down money or losing, you don't want to stop because you're down money and losing and trying to make it. So trust me, I never used up vacations. Traded at Raymond James and Dundee Securities, and I used to trade commodities with ED&F Man in New York. But those were a lifetime ago. So let's get into it. What does a trader like the two of you do? What is trading?
I mean, I can give you a first round here anyways. I'll let Shawn take over here in a second. But from our perspective, we're very, very short time frame traders. So we're intraday only. We go home at the end of the day completely flat. So we do not carry anything overnight whatsoever. So we're looking at very, very short time frame. Obviously, that means we have to find things that are moving first off. So that comes down to anything with some kind of news catalyst or something surrounding the stock that's making it move on the day. So our first job as traders, intraday short-term traders, is finding those stocks. And that's going to come down to, as I said, something with news, something with a catalyst. And then it's a matter of finding, where you want to be involved in the trade and why after that. But I'm sure you'll have an opinion on this as well.
Well, we are talking, great question, Barrington. We're actually talking before this show started here. I've made over 200 trades today, and that's 200 fills. And what we're trying to do is really just the art of scalping. And it's in and it's out. It's fast movements and a little more share size than maybe the typical retail traders looking to trade with. We'll trade with a few thousand shares. And if you can quickly make that 10, 20, 30 cents or so on that share size, then yeah, you do have a little bit of an advantage there. In and out, lower fees, and it just allows us to get in and out on some of those great opportunities like Branden was talking about. Earnings, maybe a release fresh off the press, like a new mine's been hit, or today with Barrick Gold and things like that. If there's any kind of news like that, that's kind of what we're looking for here and get that edge.
You actually jumped in to what I was my next question, which is gold. Gold is in the news. Everyone's buying gold. If you take an Uber and the guy or girl driving says, "Hey, are you in gold?"
See, that's
then usually that's a sell.
You should be selling, yeah.
Wait, I get my best stock tips in the Ubers. What are you talking about? This is where I get all my information.
That was
in the barber shop.
That was a common indicator. Now, let's talk about indicators. What are indicators when it comes to trading?
Oh wow! How much time do you have?
Yeah,
I mean it's obviously a very popular topic to say the least. But an indicator is something that's going to be passive in price movement. So if you're looking at a chart with a whole bunch of indicators on it, it's only going to show you what has already happened. Right. So I mean that's very, very broad, obviously, of a statement. But something like a VWAP or something like a moving average or something is calculated.
Sorry, what's a VWAP?
So VWAP is volume weighted average price. Please, guys, if we get ahead of you here at all.
No, that's what we'll do. We'll just
tell us to.
We've just been on the air for 3.5 hours straight, so we like.
You're lubed up.
Yeah, volume weighted average price, which is probably the most popular indicator out there today, which is simply taking price at volume. So where did the most volume occur in the past? But again, so all indicators are on historic price data. So anything that's happened in the past, it's not showing you, the real market, what is happening right now, order flow, things like that, which we can also obviously jump into.
Yeah. What we're finding also, Barrington, is there's a lot of trades that are happening in the first couple minutes, especially right now. A lot of traders sitting at home looking to get their money in the market as soon as the market opens. So some of these vaccine names and whatnot tend to just go crazy right off the open. So not an easy trade, but a trade that we're looking for are these kind of stocks running and taking out their new highs, creating new highs as the day goes on. So this has been a very profitable trade for us, as well as volume weighted average prices and moving averages. It still remains the same. A lot of it depends on your time frame. We use 1 minute charts, 3 minute charts, and then the largest time frame I use is a 12-minute chart. And most of my trades I'm in and out of within 5 or so minutes. So it's kind of like that quick little tick. You're looking for that edge. So anything like a volume weighted average price, as soon as the market crosses that price, that's generally a buy signal to the upside, and then a sell signal to the downside if you cross it negatively.
So let me just come in for 1 second. So people who are maybe new to investing, there's people like Warren Buffett who are value investors, long-term investors. They're poring over financial statements and IPO documents and prospectus. You guys don't even look at any of that. You're just looking at a chart and catching a wave, getting in and getting out.
I would even go as far as saying 60 to 70% of the time, we don't even know what the company does that we're trading.
Yeah, we've seen that.
No, listen, it comes down to price action and volume. If there's volume and price is moving, then we're interested. The why and the fundamentals come after that.
Yeah, we actually, guys, have a huge advantage because there's main two traders on the floor, myself and my partner Neil, and then Brendan comes with the breaking news. So he's 100% right. There's a lot of the time it says XYT stock is going crazy, and then we'll just go over to it, maybe trade it, and then he'll come with the story or give us the story as it is. So right now, it's kind of like what we talked about with Barrington there, and that is when the market breaks and certain levels are breaking, if you can miss it, you're sort of under the gun there. But we have an advantage of having direct market access. So we don't have to wait 15 minutes delayed quotes or anything like that. We're in and we're out, and sometimes it's seconds, sometimes it's minutes. But yeah, breaking news is huge for us.
Now, where do you get your news source? What's your go-to?
Perfect.
So we have a couple to put it bluntly. There's Reuters that we use mostly. So we have I'm actually sitting in front of a Reuters icon platform right now, which is very similar to a Bloomberg terminal. It's just their version of a Bloomberg terminal. So anything that happens instantaneously in the market, I can easily throw a ticker in. Do a quick search. All the recent news stories will be presented to me. So that's one. We use a program called, our website, I guess it is, called Trade Ideas as well, which is just a general market scanner that pulls out things that are doing higher volume maybe than they normally do throughout the day. And then you kind of have to dig into it a little bit and find out, the why and the how. And like I said before, the where we want to get involved with a trade.
What a lot of people may not realize, especially if you're getting into trading for the first time, is that there is so much work done after the market or before the market. Yep. You guys do homework, you do research, you look at charts, you do analysis. I used to use pivot points and candlesticks, which is definitely showing my age. But
not really. I mean, we have a market wisdom page out, Barrington, as well, where we have over 85 videos out right now on YouTube, all for free, where we do talk about pivot points and candlesticks. And you actually just hit two of the topics on there right now.
Speaking of
we'll link that right now. If you're watching, we're linking that right above. I believe we can do that above. If not, down below. Check it out.
Great.
Shouts.
And we film those. Yeah, shout out as well. Thank you so much. We film those every single week, and it's more topics. And we're really looking just to educate our audience, and that's the most important to us every single day. We have over 70,000 subscribers to our live daily show, where we do exactly that. We have a live chat, Barrington, and I know some of the questions you were asking, they get asked often on our chat as well.
Every day.
Why did you guys get involved with that trade? What was the breaking news? And about homework, we have a free daily watch list that goes out to all of our viewers, talking about some of the symbols that we will, be linking to and talking about. So yes, is there a lot of research put into it? I'd say there's a decent amount. I mean, do we pile through earnings reports and things like that? Not really. But if it's a big one like a Microsoft or an Apple or something that we know our viewers will be into, then sure, we'll make sure to hit all the points. But generally speaking, you have like 100 to 300 companies that can report on a busy day. So makes it hard. We're looking for price movement.
So when it comes to, you mentioned, Barrington, when it comes to preparation, you mentioned there quickly, I sit down at my desk shortly after 7 o'clock each morning. and we go on the air at 9 a.m. So there's a 2-hour window there where we kind of take, the overall market and then drill it down into a list of 10 or 12 individual names that are moving in the pre-market that, we figure out the why, first of all, the news story behind it. And then we talk about from 9 to 9:30, first 30 minutes of our show is all about here's what's moving in the pre-market and here's how we should look at trading it once 9:30 hits.
Now, how you guys seem like two energetic go-getters.
No idea.
How do you manage your emotions? How do you try and keep your emotion or your personal bias out of it, or maybe you want it in there? I'm not sure.
Yeah, no, listen, it's a great question. It's one of the hardest things I think traders, especially when they're starting out, struggle with is tying the emotional part to the price movement. You see the dollar amounts going up and down and up and down, sometimes down more than you want them to, up obviously more than you want them to.
Try to hide how much we're losing.
It's honestly, it comes down to experience. It comes down to sitting here in front of the monitors day after day after day, hour after hour, and building up that tolerance for those types of price swings, for those price swings as well in your account before you get to kind of a point where it's not a heart attack every single day, and it's also not I guess the most stress-free thing is the best way to put it.
You have to. I have 19 years experience here, all with Day Trade the World, and the benefit of having this experience is that you have to start treating it like a business. And I mean, you just every single trade that you're in, you can't. And we joke about this on the show all the time, and we do have tons of energy. And check us out, guys. But we joke about it all the time. You don't have to be married to an individual trade. You can.
Well, you love it until you don't.
That's to a lot of people's hearts here, but seriously though, it's in and it's out. There's always different opportunities around the corner, especially now there's new IPOs with your marketplace as well. Something that would create instant kind of volume. We can be right and we can be wrong. And again, for me, and we get a lot of feedback on the show, a lot of traders love the honesty that the show does go through. So we will talk about our negative trades in the same light that we'll talk about our positive trades. There's a lot of traders out there that tend to forget about the mistakes they've made and just really pump their own tires on the wins. But for us, we go in and we go out. We say, we went in based on this indicator, didn't work, we got out. And I think that's a lot for lessons for our traders. That's one of the most important things. Anyone can find a stock to trade. It's what do you do when you're in trouble? I mean, when you're winning a stock, people say, oh, well, I just made $100. Oh, could have made $150. But to me, it's about the other side. I just lost $100. Thank God I only lost $100 because now I'd be in trouble 150, 200, 300. So we talk about our ins and we talk about our outs. It's about education and having a great time on the show.
Do you guys employ short trading strategies, or do you just like to buy and then get out? And like, tell me a little bit about your thought about the two different styles.
I would say 9 out of 10 trades I make personally are on the short side. I simply find that, and listen, everyone's different.
He's ruthless.
Everyone has their own style. Everyone has their own strategy that they feel the most comfortable with. And that's a great thing about trading, is that you can adapt some of your own personality into the way that you approach the market. And for me, that's just where I've found the most success. So to answer your question, like 9 out of 10, I would say trades that I make are on the short side.
And for those watching, that's you're selling it without owning it.
Right.
And you got to borrow it to fill the
shares, selling them, and then covering them.
Yeah, we got to find the shares. Yeah, we find the shares from the broker, offer them in the market. Someone pays us for whatever the current price is, and then we're able to capture the profit on the downside. And for me, it's just a matter of whatever way the patterns are set up. I don't really look at it. The right side of my keyboard are buy orders, and the left side are sell orders, and I just hit them based on what the setup is.
That's weird. I have mine the exact opposite.
You guys are mirrored. The term algo trading, algorithmic trading. Yes. What is it, and what is it doing to your business? Is it helpful? Is it hurtful? What's your opinion?
Neither. To answer your question, neither. So algorithmic trading is essentially any strategy whatsoever. Whether you are, a hands-on guy like we are, we're smashing the keyboard every day. You can take that idea and break it down into a step-by-step process. You can have a coder, then someone who knows a coding language, essentially write a program that will execute those different steps of your strategy for you. And a lot of guys here on the floor, on our trading floor, and a lot of guys out there will have even parts of their strategy automated. So they'll have maybe the entry that they do themselves, and then they'll have the trade management and the exit automated for them. So, to throw out that term algorithmic trading, like it's a very broad term that covers
black box,
it covers a lot. I mean, there's high frequency trading that we can also go on forever about, but algorithmic trading specifically is just simply taking any trade ID or any way of approaching the market, writing a program that will manage that and execute that trade for you.
One thing it does provide, Barrington, is a lot of volume into the market.
Definitely.
So there's a lot of hedge funds and whatnot that create little rules and, like you said, algorithms that just hit the market based on what they see. It's not sensitive to emotion. And I think that takes away for some traders the question that we asked earlier on, and that is that how do you deal with losses or some of these emotions? And quite frankly, an algorithm doesn't. They punch in, they punch out based on set of rules, and that's what we really try to do as well, and include a little bit of human greed as well, because sometimes. I do feel, I say that jokingly, but it's true though.
100%.
I mean, if you're not looking for those big wins and you're stuck on rules, then a lot of the times you won't have those overextending wins, at the same time losses as well. So I think it helps the marketplace. It definitely brings some volume into it, but it's all about making sure that it's regulated and there's proper steps being taken for not the secrecy, but just to make sure that everything's on the up and up with the market.
I'm going to ask another question about arbitrage. What is arbitrage?
That's
okay.
I'll let you take this first, because I know there's a million different ways that we can answer this. But
I mean, arbitrage in our example would sort of be where you're seeing something that's maybe unpriced, like it's not priced properly, mispriced. Good word, unpriced, mispriced. Based on another asset. So if you're basing, for example, Barrick Gold on the current price of gold, and the stock price isn't moving, but yet the underlying asset gold is moving upside, you may then buy a Barrick Gold thinking that it needs to catch up with the price of gold. And with direct market access, now this doesn't happen anymore because the SEC has stepped in and fixed some of the rules in there, the OSC, the market regulations. You can't buy from the CSE at one price and then sell to, apologize to say this, the TSX at another price. The prices have to be lockstep. So right now there's a lot of arbitrage that don't really exist in as far as the market centers are concerned. But as far as the underlying asset of things that are included into ETFs and whatnot, there are arbitrage opportunities for misplaced or mispriced assets. So I think that's opportunity there as well. And
currency is a big one, right, guys? Like you could look at someone who sells into a certain country and then a geopolitical event happens and their currency could get totally changed right overnight. And then what happens if that's trading Canadian?
There was another arb trade that used to be really popular, but speaking of algos have kind of priced it out of the market essentially, where you get a stock that's interlisted, so trades both in the US and maybe over in Europe. And obviously Europe opens way before the US does. So there was, a price disconnect when the pre-market trading started in the US versus what the stock is trading over in Europe. So things like that have slowly over time kind of been arbed out of the market.
This is the final question because we're getting up to our time allotment. Hey, this is just part one. I don't know what this is not the last one.
Barrington, I'm sorry, it's second final question. I got another one, but you do your thing. Yeah.
Second final question. What is your number one advice that you would go back and give yourself, whether it's 19 years ago or 15 years ago or 10 minutes ago, because we're always learning. What's your number one piece of advice that you would give yourself as far as trading?
Buy as many Bitcoins as you could have. I'm going to
steal his answer and say buy Apple.
Yeah. Well, I did buy
20
Apple.
years ago.
No, Barrington, are you talking about just from a trading side of things?
Yeah. Just like technique or cutting your losses sooner.
Yeah, give me something someone could actually use if they don't have a time machine.
Well, that's the other thing. The only thing and it's actually funny because Brendan and I talked about this the other day, and you may remember this, Brendan. It was that we wished perhaps that we got into coding ourselves.
Yes,
maybe
definitely. That's a great one. That's a great one.
Yeah, that's good.
I really appreciate it. But no, coding. And what I mean by that is just that we have so many ideas right now floating around our head just from the experience and from what we're doing on the show that it would be kind of cool if we also had like a mini little not algorithm, but something running on the side that if we knew how to program it and not pay somebody else to do it, then we would be able to do that ourselves and then adjust it as you go. Because like you mentioned, Barrington, the market is always changing, let alone 5 minutes ago. How about a minute ago? So to be able to have something in a box that you can then go back and edit yourself and sort of, put in those parameters, I think that would be a big thing. And then the other thing that, and I've had this with my kids right now, I've had to learn it a little bit more, but patience. And that is just be patient, right? Barrington, you probably know when you were on a trade desk, same thing. So many trades will eventually work out for you, but you just kind of give up on them. So I would say,
ignore the noise, man. Ignore the noise.
Perfect example. Ignore the noise. It goes a reminiscence of a stock operator, an old book that I recommend.
That is the Bible.
Exactly. There you go.
That is the Bible. Read
that
it.
actually leads into go ahead. Sorry, finish.
No, I was going to say, and it is not noticing the noise and just learning from your own mistakes, learning from your own ideas, and really sticking with them.
I think it comes down to being open to the market in general and being open to investment. I think from a higher time frame kind of view, it's great at a young age to be presented with opportunity. Right. And we've had this historic move this year in the market because of the pandemic. So we've seen this enormous influx of retail money coming into the market. So there's obviously a lot of people who are doing just that.
Yeah, no, thanks for that. And sorry, last question. You mentioned a book. So if you're new to trading, other than going to your website, what's a great resource? Like you mentioned that book, and I'll link below, but any other resources that you guys like to share? Or I wanted to take this question into what movies should people watch to really understand stock trading, but I don't think that's ever been done properly unless you know of one. I know that Wall Street 2 definitely don't watch that. But any books or resources in the pulp culture milieu that you can suggest?
There's been a few. I think there's a prop firm in New York who's run by a guy named I don't even remember his name right now, but the book is called One Good Trade. Mike Bellafiore. I'll put that one out there. That's a really good look at an actual prop firm. The struggles first of all, and some of the wins that come out of it as well. But it gives you a good idea of what a trader goes through on a daily basis.
Yeah.
I really just think that reading is great. There's tons of resources out there. Our YouTube site that we've already linked, the Stock Market Wisdom as well. That's very important. For me, it's about understanding yourself and what you're capable from within, because Branden and I can look at each other and both make money today, but have completely different trading strategies.
100%.
Completely different.
I can show you two trades actually that
risk tolerance.
I made money short this morning and Shawn made money on the long side, same stock.
Yeah, I tend to be a bull, but
were you trading against each other? What happened there?
No. Let's keep that on the download.
Two different two totally different times of the morning, but two different moves in the stock, one down and one up.
And that's what I mean. It's just about understanding where your strengths come from. So I think just self-evaluation. And we talk about paper trading, and if your viewers are interested in what that is like simulation. So don't put real money. This is my advice again. Great book there. We talked about reminiscence of the stock operator, but make sure you develop your strategy and test it before you go live. There's so many traders that will deposit $1,000 in an account, $5,000, $10,000, and then within a couple of weeks it's gone, and you don't get that money back. So practice your strategies, be strong in what you're doing, and believe in yourself. That's my number one tip to everybody. Believe in yourself. You can do it. Anyone can become a trader, but it does take patience, and it can take a little bit of a longer time than you may expect.
Awesome. Well, thank you for dipping your toe in the water of the aftermarket with myself and Barrington. Thank you for believing in us.
Thank you for being guest number 1 and 2.
No, we can come on again.
And obviously, we would love it if you guys would come down and visit us here.
Yeah, no, we were meaning to, and then all hell broke loose. So this is almost as good a way to do it because I'm in my basement. But thanks, guys. Branden, Shawn, that's TraderTV.live. Thanks so much for joining us for these. What do you call the after hours of the aftermarket? I guess so that's what we'll call it, Barrington. Where we sit down with some guests and we just chat about the market and other business and culture topics. Thanks again for watching. If you like this type of content, please hit like. I know my mom watched the last video, so thanks for watching again, Mom. And subscribe down below, or just join us on CSC TV so you get all these episodes of Aftermarket, and certainly want to see you on the next one. So thanks again, guys. Really appreciate it. and Barrington. Another successful episode, I think.
I think so. I think this time we're going to make it to 110 people.
Yes.
So.
Yes.
Thank you, Barrington.
All right. Thanks, guys.
Thanks.
Thank you.
Bye.